those who are here. Appreciate that. We try to do at least one Zoom program a month that's interesting to our membership. And just to give you a little background, we've got Relias, Dillon and George here from Relias Tax Group here in Chicago. I had conversations with George going back a couple of years ago. We lost touch and then saw them again. I think was it at ICSC, George?
Yeah, we saw each other at ICSC and with Dillon as well, and we were glad to reconnect with you guys.
Yeah, so we started talking and we had lunch here in Chicago and thought a program like this would be of interest to the membership on how they could, save some bucks through the tax process. And uh, so I will turn it over. Dylan, are you going to take it first?
Sure. Let me do a couple things here. Can you all see me and George?
Can see you.
Okay.
Now, there you go.
All right, great. Well, good morning, good afternoon, everyone. My name is Dillon Nichols with Relias Law Group in Chicago, and George Relias, my colleagues here. We're going to talk today about property taxes and how it can definitely be beneficial for your all's clients, and talk about how a partnership between a firm like ours and you all could be mutually beneficial across the board. So again, we are Relias Law Group. We're a real estate and property tax law firm located in Chicago, Illinois. But we do have a national scope with a local expertise through our comprehensive local counsel network that we'll get into. But we're really happy to present to you today. And this may be something new for you all. So if there's any questions, we encourage participation. You can chime in at any point, particularly if it's on the top of your head and we're on that point. So don't be bashful, please. There might be a way to either just jump in verbally, or if you want to raise your hand or put something in the chat, however you want to participate, we welcome all of that.
But our goal is to make sure or try to give you some ideas that you can present to your clients that will make you look smarter, make you have a better relationship with your clients, and perhaps save everybody money and generate revenue. So that's kind of the hope here.
Just a little bit more about our law firm. We're Relias Law Group in Chicago. We do real estate tax mitigation and real estate transactions. We bring together experienced real estate attorneys, former government assessors, and that's the important body we'll talk about, and property tax analysts, and we exclusively represent property owners. We'll talk about what the taxing bodies are, but they're the other side of the table. They're the entities looking to collect money. There are some law firms that do represent just the taxing bodies, and so we are an adversarial system. So you have two sides of the table, attorneys on both sides, but we represent exclusively property owners to achieve a fair result. So we'll talk a little bit about how people object to this tax appeal process, but what we're trying to achieve is to make sure that the property owners pay just their fair share and nothing more. Taxes can be allocated across properties in the entire jurisdiction, and so we would just want to make sure that you're fairly assessed and not overtaxed. Like I said, we do real estate and personal property tax mitigation. There's multiple levels in the appeals process we'll talk about. Some other services that we provide that are important for this group right here is we do pre-acquisition tax projections. So when a client is buying a property, or if they're selling a property, but particularly buying, they want to know what the expenses are going to be going forward. And what we do is we give those projections with a couple assumptions: the high, the low, and the probable outcome, which helps for budgeting purposes. If you're buying in Chicago, Illinois, people are always scared about the property tax system here, but if we can give you some projection, it will help you with your budgeting and due diligence too as well. So if you're going through that whole process, just wanting to understand what the tax regime looks like, we help with that. We do have a nationwide reach through our local counsel network. Most jurisdictions have a tax appeal process. Some are more onerous than others, but it makes sense for clients who have portfolios of properties across the country to work with one law firm, to have that one point of contact, to have that one consistent client experience. And that's what we offer. We're not going into Texas to prosecute appeal at a local assessor body there, but we have our network that has those relationships and knows the nuances of those jurisdictions.
Yeah, the local co-councils or councils that we work with, they're going to the assessors golf outings, they're going to the assessors, fundraisers, so that they have a better understanding of, the nuances of that jurisdiction. We're not going to go into, Harris County, Texas, and pretend like we know what's going on there. They'll chew us up and spit us out, just like we do when, Texas lawyers come to Chicago, we blow them out of the water. So it's having that local representation with a national scope where we can provide standardized pricing to a client, standardized reporting, and standardized, one single point of contact is important. I think that's what makes our approach a little different.
And for your clients that have portfolios, it makes sense for them as well to have that one point of contact. So they're not going into Texas or Minnesota or Oregon to try to find that local counsel that has the different processes. There's one consistent client experience that we provide. Just like you all, we're a success fee as well. So we're a contingency fee firm, meaning we're paid a portion of the tax savings that we are able to generate, and the client doesn't pay us unless we win. And so that aligns incentives and also means that the client always nets out better than if they worked with a flat fee or a billable fee law firm. And we'll just talk, about the tax system, the aspects that go into it. But property taxes serve as the primary revenue source for local jurisdiction in most U.S. Local governments in most U.S. jurisdictions. You all pay property taxes. You know what those feel like. What's a little ironic about the property tax itself is it's the most reviled tax out there. People rail on every income tax, but property tax, for some reason, people hate the most. But ironically, it's also the one they see the taxpayers generally see as the most efficiently allocated. So you see, your schools getting paid for. You see the police and fire department in your neighborhoods, and so you see the benefits that derive from the property tax system. While it's also the one you feel the most and often hate the most. So it's a little interesting dichotomy there. But four aspects of the tax system we want to talk about is the first one is the property valuation. So we're talking about local assessors, and these are elected entities or elected officials that manage these assessing bodies, and they're supposed to value the property across that jurisdiction. We'll talk about levels of assessment and how that plays into the tax burden, but basically they're supposed to set what that fair market value for that property is. And there's different jurisdictions have different time frames. So in Cook County, they do it every 3 years. It's on a triennial reassessment cycle, and so you get this flat. It's usually stays flat for 3 years, and then it jumps up during that reassessment cycle. And with property values, and you've all seen them skyrocket. That actually impacts the fair market value as well. So you get these huge 300% spikes, and that's where we're always fighting on that increase. The way that we operate is there's colorable arguments to say it's worth this much or not, and so that's where we play is to get that fair market down because that reduces your tax burden.
But Dillon, just to be clear, also across the country, I mean, most states are on what's called an ad valorem system, like Dillon's discussing, where your real estate taxes are based on the value of the property. But there are other states that don't necessarily use that ad valorem basis. Some are on an income or on a cost basis, or some have different setups. But for the most part, most counties are based on the value, and or most states, I should say. But the underlying theme is nobody likes to pay real estate taxes. I guarantee you that none of your clients like to pay it or want to pay it. And sometimes they feel like their hands are tied, that there's nothing I can do about real estate taxes, but that's not necessarily true. And that's why we're here today. But ad valorem is majority of the country, but there are certain pockets where they don't do it that way. But just be aware.
Yeah, the one that people know most about is Prop 13 in California back in the 70s. It sets the floor of the property value at the transaction price and can only increase a certain percentage every year until the new transaction. So yeah, that's just the difference between ad valorem and other sort of lockstep taxing systems. But the next component we want to talk about is the levy determination. We call the levy is basically the budget that funds the local bodies. So you have the school district, the police department, the municipalities. They calculate what budget they need for the upcoming fiscal year. And then the tax rate setting is basically just a function of how much money the levy needs compared to the property valuation across the jurisdiction. And that's what equals your tax burden. So you have the assessed value times the tax rate equals the tax you pay to fund the levy. And so the critical thing to know here is that if your property is assessed inaccurately, you are likely paying more than you should, potentially thousands or millions, as we'll talk about.
Yeah.
And we'll give a quick overview of the multiple level appeal process. It varies by jurisdiction, but generally you have an administrative challenge where you ask the assessor, or you tell the assessor that he or she got it wrong, and you present some evidence. It has changed historically between what may have been a successful challenge in Cook County, but that's where you start. You ask the assessor to basically value your property. If they deny your request there, or don't give you as much as you want, you can go for a second level appellate review. Different jurisdictions have different bodies. In Illinois, we call it the board of review, which is the neutral body arbitrating the dispute between the assessor and the taxpayer. Again, this is more quasi-judicial. You have to present strategic evidence and navigate the rules of these appellate bodies, and potentially court action. There's a third step where you can file a lawsuit and continue to prosecute your appeal through that last level. But again, that could take several years. In Illinois, that's usually three years down the line at the least. One good thing about that third action, the court challenge, is that in Illinois they do pay interest on the amount that they're able to refund. So that's at least nice for the client. And it's also nice that it's found money for the client. It's nice to cut a check back to the client for refunds that the county gives us. So, but again, all these challenges, all these levels have different processes, but also deadlines that are important. So sometimes you might have a 1 month deadline to file your appeal, or else you lose at that level, which could box you out for that whole year. So missing deadlines or failing to present the right evidence can cost your clients lots of taxes.
Hey, Dillon, and just to also underscore, there's a lot of competition out there for this. I mean, there's a lot of consultants that are out there, and you may have run into, Ryan Associates, or, there's a bunch of them that are consultants that do this. And typically they'll go to the administrative level and say, hey, we worked this out with the assessor, and this is the greatest deal you have. You should take it. And the reason why they do that is because they don't have to, they're not attorneys, and they can't go to those higher levels. They can't take it to circuit court, or they can't take it to the appellate court without handing it off to an attorney to do that. So, sometimes the local jurisdictions say, hey, I've got Ryan here. We'll throw him a bone. We'll give him a reduction because, we don't think he's going to take it to the next level. Whereas sometimes they come to us and they're like, oh, we need to really work with these guys because we're going to see him at the appellate level. We're going to see him at the circuit court level, and it's going to take a lot more time and effort. So let's make sure it goes away and we get a better deal than the consultants that are out there. And there are certain jurisdictions like Minnesota where you really need to go to circuit court. The local administrative levels are just, they don't do anything. And, the counties are kind of bank on the fact that, if you really want to challenge this thing, you got to take it up the chain, and it's going to take time and money. And a lot of people don't want to do that. But in the end, it can be really beneficial to the client. And you want to have a source that can really take it to all three levels without having to hand the ball off to somebody else, or, re-educate themselves and at that next level. So there's a lot of competition in the space, but, I think you really want to start with the ability to go all the way by hiring an attorney. And that's something that your clients should know, that, just because some consultant tells them this is way to go, doesn't always mean it's the best in the end.
Good point. And we're here today, talk a little bit about the benefits of a partnership between the broker community and a law firm like ourselves. For you all to become the trusted advisor for any of your clients owning any asset class, really, what you can go through the appeal process. But why partner? Why does it make sense to partner with us? Well, first, like you all, we're a success-based fee. So our contingency fee-based model means it's risk-free for your clients. I said earlier, they don't pay unless we win, and they always net out better since we save it. We're paid a portion of the amount we save them. It strengthens your relationship with your clients through this value-added ancillary service. So, if there's other needs that your clients have, if you can help meet those needs, it keeps you top of mind and makes you strengthens your relationship with your clients. Another thing that people don't realize is that triple net tenants can appeal their taxes. We hear a lot of times that, well, I'm a tenant rep on the tenant rep side, and I didn't really know, I can't do much about the taxes. But that's in every jurisdiction. If you're paying the taxes, whether you're paying it directly or if it's a pass through from the landlord to the tenant has standing to challenge the taxes. And George can talk a little bit about how that might be a potential revenue source for you all in saving taxes.
Yeah, I'll give you an example. My background is I worked at Equus Corporation for many years, and Equus was a real estate tenant rep firm that existed. Now it's part of Cushman Wakefield, and I worked at CB Richard Ellis for a while, on these corporate accounts. But in the tax appeal world, we represented a national telecom company that were kind of based in the West Coast. And what happened is that telecom company was selling their real estate assets and leasing them back. Okay, so they had all these master leases and sale leasebacks all across the country, and those assets then fell into the manager of real estate's portfolio and his responsibility. He didn't realize that just because they were leased or because they were triple net leased, that you could still appeal those taxes. So we went in and we appealed, all these triple net facilities that they had sold and bought back or leased back, and reduced the taxes by millions of dollars in this guy's portfolio and his responsibility. And that reduction hit his bonus line, because, he was compensated by, how much savings he could generate in his real estate portfolio. And the brokers that were involved shared in that, bonus pool. And this became an absolute windfall for this real estate manager and the brokerage team that was involved on it. And it was all because they never realized that they could appeal these triple net facilities. And that guy had a pretty good bonus year at the end of the day. So, there are strategies that can be done just because you don't own it. But if you're responsible for the taxes, you can have, there can be meaningful opportunities to do a good job for that client, make that client, save some money. And, at the end of the day, everybody was happy. It was win, win, win all around. So,
and there's another win there too for the landlords, because if either you as an owner, landlord, or if the tenants are not appealing the taxes, they can spiral out of control because each tax appeal year stands alone. So if you're not appealing your taxes, the assessor keeps the value inflated. You can't go back and recoup 10 years worth of savings. So your property is saddled with too much tax already. So if you're going to market, a buyer might look at what the assessed value is compared to comparable properties, and it's hard to get that down if it spirals out of control. So you really want to have this done on an annual basis. But another component of why this would make sense to partner with a group like us is the tax proration accuracy. So when you're doing a deal, in Illinois we pay taxes 1 year in arrears. So a huge component of the attorney approval and negotiation is what's the closing tax credit going to be between seller and buyer. And it really depends where you are in the reassessment cycle compared to what you think it might be the next year. And getting those credits accurate can really shift the the burden a lot. I'll give you a perfect example, personal example, but it can transcend to commercial. I bought my house in a northern suburb in late 2022. The reassessment year for my township was the next year, and so we knew it was going to go up. We got a large tax credit based on the next year's expected reassessment cycle. Um, However, because the purchase price that I got was significantly under what it was assessed at, I actually got $5,000 of savings over the next 3 years. It was basically a third of my taxes that I saved. So I got a huge tax credit because we were expecting it to go up, but I also got tax relief through the appeal process. So I got a win-win as the buyer. You can translate that to commercial as well. So it's important to know how the tax credit impacts the financial burden on each side of the transaction.
Yeah. So just having a resource that you can ask those questions, that you can, go to your client, make them look smarter when you say, hey, did you think about the tax implications of this? That's going to help, I think, you develop a stronger relationship with your clients, stronger relationship. And, again, if you look smarter and are smarter, you're going to be better than your competition.
And we're talking mostly about the tax appeal process right now, and that's you challenge the accuracy of the assessor's value, but there's other tax incentive programs out there that you could be knowledgeable of to maximize your impact. There's things like affordable housing credits, there's tax increment financing programs, there's a range of things that are in addition to the tax appeal process. So as I said earlier, it's each appeal year stands alone. So it really needs to be an annual conversation. So if you have that annual conversation, keeps you top of mind for your clients on the next transaction. And it's important to have that touch point because sometimes things fall off. So we have a client right now who it's important that George can talk about why it's important to have that annual touch point.
Yeah. I don't want to get too detailed, but we had an industrial client whose industrial buildings were on an incentive program in Illinois, and the incentive program lasts for 10 years, but then they were responsible for maintaining that. And we got the new assessment came out, and it looked like it started to phase out. And we're like, hey, what's going on? How come you guys aren't, why is this phasing out? And they weren't watching the incentive. And we stepped in, and we were able to. We're working on getting that reinstituted going forward, but they're going to lose 1 year because they weren't watching the ball. And if you have somebody that is watching the ball, or telling them to, hey, look at your incentive, look at this, when does it expire? You can be ahead of that curve, and they'll appreciate that, because I mean they're gonna have to pay more tax that they shouldn't have, just because they weren't on the ball with it.
And there's other ways that folks like yourself with the unique knowledge of the client's property can really help us on an appeal. For example, vacancy is a big one. If your facility is vacant for some reason, you're trying to fill it, you haven't been able to yet, we can get significant relief based on that vacancy. So your knowledge for things like that really help. So
in most jurisdictions.
In most jurisdictions, sure. So unique things like even disaster or fire, water damage, things like that can help us distinguish the subject property compared to comparable properties is really helpful. So we just ask that ask your clients if they have tax counsel for the properties, and if they don't, think about connecting them with us, but keep that annual touch point so you're top of mind as well.
Yeah.
We talked earlier about the consultants out there, but we think it's important to have professional support through a law firm. Some entities, owners try to do it themselves, which again, we talked about missing deadlines and things just fall off the top of mind. But at our law firm, we take a proactive approach. So we have client files, which we review every year to see where the assessments went. George just mentioned that one client where we saw this unusual spike. So every year we review the assessments when they're published. We determine if an appeal is necessary, but it's a zero burden service to you all and your clients because we handle everything in house, which means your clients never miss opportunities for savings, and they stay ahead of costly errors on their assessments.
Yeah.
Just quickly about our rapid tax mitigation strategy. I mentioned earlier, we review assessments every year to find discrepancy. If we determine it makes sense, we appeal them through the appeal process we talked about, which helps protect your clients' investments through aggressive tax appeal and projection strategies. We use innovative techniques and theories to get results, and we deliver real meaningful results through our aggressive advocacy. So just one.
And Dylan, just one last point about that. Even if there's no appeal, say we go through this and review it, and we go back to the client and say, hey, the value on this property at $10 million is great because it could very well be 15. There's value in telling the client that, hey, we checked this out and you're good. We don't want to rock the boat with it. And so there is value in, even if there is no appeal and there's no charge for it, but you telling the client you're good, we looked at it and I had our local guys check this out. I mean, that's a win-win there, even if there's no savings that can be generated. So
Yeah, it's just one success story I like to talk about. We represent a data center in the Chicagoland area, and everyone knows data centers are super popular now. The assessor also thinks they're popular, and so they jack the rates up, the fair market value. So we represent this company here, and we've saved them 4.6 million over the last 5 years. But last year we saved them $1 million in taxes they didn't have to pay, and that's $1 million in taxes, not assessed value. We talk about, we're always fighting over the difference between what the assessor thinks the property's worth and what we think the property is worth. So that's the assessed value we're fighting over. What I'm talking about here is $1 million in taxes that they didn't have to pay, and that's real money for Google even. So we think there's and here's how we did it. The assessor saw this as a data center and taxed it or valued it accordingly, but really what it is a almost 100-year-old office building that was built back then, and that's really what is designed for and still is. Illinois does not tax personal property, just real property, and so all the fancy equipment inside this data center is not taxed. And so our argument was it was designed for and still really is a functional office building that's just been hollowed out with a tenant in there that sells fancy things. And the board of review agreed with our position, reduced the fair market value enough to generate $1 million in savings in 1 year, or like I said, 4.6 over 5. So that's, if you're investing in high tax jurisdictions, you can get real savings if you do it right.
Value is only an opinion. I mean, we've kind of talked about having the right value and if it's assessed correctly or incorrectly. It's kind of there is no such thing as a right value. Only because, valuation is more of an art than a science. So, it's just a matter of, you can make a cogent argument that says the value is a whole lot less than what you, Mr. Assessor, says it is, then it'll save you money. But valuation is just an opinion, and that's what appraisals are. That's what and our opinion may be different from the assessors, and it may be different from a buyer's, and it may be different from everybody has a different value and a different opinion. We're just trying to argue for a low value so that it will reduce the taxes. But just remember, there's no such thing as a right value or a wrong value, only one that you can support. And if you can convince the other side that it's lower, it'll result in lower taxes. So don't get hung up on, is this value the right value? My property's worth more than that or worth less than that. It's just for taxes, and it's just an opinion.
Talked a little bit about this. We don't have to go on too much about it, but the contingency fee-based advantage of our model aligns incentives. We're not trying to file appeals unless we think they're warranted. And again, the client only pays us a portion of what we save them, and therefore there's a net benefit guaranteed for your clients. and I talked about the transaction support services, but again, we want to help you all make transactions close as well. Talk a little bit about some key takeaways. By the way, this is the Board of Trade building on the right there. It's our office downtown at LaSalle and Jackson, the historic LaSalle corridor. Really like it there. But a couple, George, you want to talk about some key takeaways?
Yeah. So here's, from your perspective, and again, having been, at in a real estate firms before, you want to know, what do I need to know that's going to help me, with my clients. And I think the first thing to say is that if you're responsible for those real estate taxes, you've probably got a right to appeal. So look at your clients' portfolios. If they have a triple net lease and they're responsible for the taxes, they should look at that and, approach that with your client and say, hey, did you ever think about trying to challenge these? And maybe they have, maybe they haven't, but that's something you should think about. Also know that sales prices, a property sells, it's not the be all and end all. It can either help you or hurt you. And there may be ways for us to distinguish that purchase price if it hurts us and highlight it if it helps us. But, the sales price is something that, we need to understand. And, a lot of properties may have a 1031 component to it, or maybe there was some kind of a stock transfer sale, that may impact that sale price. So if we can add some shade on that purchase price that's hurtful to us because there might have been owner financing or some kind of special assumptions or something like that, that can be helpful. So just be mindful that if there's a purchase price out there, it can help, it can hurt, but it doesn't have to be the be all and end all. There's another thing too, that there are other services that are out there that can impact as well. I mean, we like to recommend to our clients that they get cost segregation studies, that they do, that helps do this purchase price allocation. And, so if you have an asset that you're selling or you're working with a client, for example, we do some nursing homes. Well, the nursing home business it's a business. It's not the real estate. So that needs to be segmented out and in order to be taxed correctly or taxed, advantagely, have a tax advantage. So, talk to your clients about, hey, how much of this is really real estate? How much of it is business value? How much of it is personal property? And, those can all impact on the ability to perhaps save some money. And so we encourage cost segregation studies. We encourage, appraisals. We encourage all that kind of information. So have those discussions with your clients, because those reports and that data can help us and could help that client reduce those taxes, depending on the circumstances. Another thing you as a broker or a real estate professional should also keep in mind is to say, hey, trigger in your mind, hey, this may be a tax appeal opportunity, is when there's volatility. You've got some vacancy that comes in the property. You're doing an addition. You're building this out. You're changing the bricks and mortar or the nature of that property. Talk to an attorney, talk to a tax professional and say, hey, we're doing this to this property. Is there anything that we can do that will be beneficial? So there may be an incentive program that can be put in if you're doing some additional work to it. B, there may be some vacancy relief that can be obtained, while you're still trying to fill it up. C, there may be vacancy, or there may be relief that can be generated during a construction period while it's not fully loaded or fully constructed. The assessors, they don't have that valuation. They send somebody out there once a year maybe to check on the property, but they don't really know what's going on with the construction you do, and maybe we can argue for a lower value during that volatile year where they're doing construction. So if there's volatility with a property, think about real estate taxes and say, hey, is there an opportunity here? We talked about, are there any incentives that are out there? Right now, affordable housing is huge all across the country. I mean, affordable housing is so difficult to obtain. So there's a lot of incentives in a lot of different jurisdictions that will incentivize people for affordable housing. So, I don't know how many of you are working in the, multifamily space, but something to think about. And lastly, I think, if you miss a deadline, it can mean a lot. The appeal windows are usually very small, like 30 days. So it's good to have that property in somebody's hands, like Dillon's or mine, so that we can watch it, because that's our business. We do taxes. We're not making widgets. We're not brokering this. We're not doing, other things. We watch those deadlines because that's our livelihood. And, so it's good to just say, hey, here's a property, put it into your watch list, put it in your system so that we don't miss a deadline. Because if you miss the deadline, you got to wait another year to do it. So the takeaway should be watch for volatility in the building. Know that you can appeal it if you are responsible for those taxes. Sales prices can help, they can hurt, but they should always be discussed. And there's a lot of incentives that are out there, and raise those questions with your clients to see if maybe they qualify, because, saving money is, nobody likes to pay taxes. And if we can reduce it, you'll be a hero. Clients will be happy, and there can be money that goes around for everybody.
And as a prime example of how general volatility can really swing the pendulum, and since we are in Chicago, I think Jonathan will appreciate it. The Chicago Bears are moving out of downtown Chicago to Arlington Heights, and if you all, some of you may know that they bought a racetrack in Arlington Heights several years ago with the plan to build out there, and they knocked the whole stadium down, so it was an empty field, except for the assessor value that empty field at $190 million and taxed it accordingly. And so the Bears went through this appeal process. And they ultimately settled with the assessor for something like, I think, 60 million. But you can see that huge difference between what the assessor was thinking it was going to be and valued it accordingly, versus how he should have treated it, which is an empty field. That's a big difference for any entity who owns property like that. And for the if anyone is on the call from an international brokerage, having somebody in the U.S. jurisdictions that understands how your clients who want to invest here, help them navigate those tax processes is hugely valuable, because it is still a great place to invest. The Midwest and other places across the country, but having that tax counsel is important when you're coming into the U.S. And I think, Jonathan, we're at the end there. I'm Dillon Nichols. Came from big law background, and now in real estate tax and transactions. And George has been in real estate for a long time, and it's been in tax appeal world for 25 plus years. So we
For better or for worse, I don't know.
So Jonathan, if you want to open it up for questions, happy to do that.
Yeah, thank you guys very much. Very interesting. And I got to say, on a personal level, kind of like you, Dillon, a few years ago, I did the same thing with my house, and I was amazed how much savings there were. So anyway, we've still got a few members here. Any questions that you guys have? This is being recorded. We'll share it with CORFAC Nation after it's done. But hopefully you found it interesting, and we continue to try to do these on a regular basis. And if anybody on this call has suggestions for topics going forward, please let us know. So, and George and Dillon, thank you very much, and hopefully we'll see you at a CORFAC conference here in the near future.
Definitely. All right.
Thanks a ton, guys. Appreciate the opportunity.
You bet.